All right, so we're going to get to some of your picks in just a moment, but I want to ask you, when we're talking about the small cap space, we heard, again, Craig Johnson saying he believes there's a 16% upside. How much of that is hinging on what happens in D.C. with the one big, beautiful bill?
OB3, I think a lot does hinge on that for sure. Certainly, we've lived this year and seen that Washington has a tremendous impact on markets and all of the underlying businesses, in our stock indices. So it does matter. We do think that the bill is going to pass. We think, most likely in July, later this month. That will remove a lot of overhang in terms of debt ceiling. It will give, I think, the street some comfort in terms of the extension of the current tax cuts. And I think it just takes, one bit of uncertainty and volatility off the table, which I think does clear a pathway for performance.
All right, so in your SMID Cap Sweethearts report, you give a couple dozen picks. You got a number of picks in here. I want to get to one of the first
68.
ones. I know, it's a couple dozen. I want to get to one of them. It's Lyft. So we've seen some big upside moves for Uber this year. When we're looking at Lyft, why is this one of your sweethearts? What is it about this company that you see a lot of opportunity in? It's obviously the number 2 player in the space here in the U.S.
Yeah, absolutely. I think it's a really interesting one because I think it illustrates really nicely what you can find in this mid-cap universe, where you can sometimes get a combination of stocks that may be a little under the radar versus the large cap peers, or maybe there's just a big valuation disconnect, as is the case here. Even just look at it for a second from a market cap standpoint. So Uber, as you call out, their market cap is 180 billion, more or less, right now. Lyft's market cap is 6 billion. And yet, while Uber is the dominant player in the U.S. rideshare market with 70% share, Lyft has 30% share. And if you look at that share differential alone, you see that the valuation, has skewed, far too much away from Lyft. And we think that it's a time for a reset. We would also call out that Lyft is doing a lot of really interesting things in its business. So, the starting point is kind of taking a look at that interesting valuation disconnect. And then you go, the next layer and see what they're doing in some of the tier 2 markets that they're playing in now, like Indianapolis and Charlotte. And they've got a great management team. There's a ton going on there.
Okay, another stock that you have in there I thought was really interesting, Planet Fitness. Now, the stock's only up about 5% this year. It's not a big upside mover. And it's also, I didn't even realize this, a really high valuation stock. Trades at about 35 times forward earnings. What are you seeing in this? Because it seems like the gym business is stagnant. It doesn't seem like it's growing to these kind of levels that would justify this valuation that you would pay up for. What are you seeing in this company in particular?
Sure. Well, again, it's another company that has a relatively new and really strong management team. So it's a turnaround story that we feel high conviction about. They are doing a lot of things within the gym to reorient the equipment. For example, moving from, more cardio to much more, strength intensive. That's really going to attract and retain their Gen Z customers. They're working really closely with their franchisees. They're doing a lot of, test, read, repeat. So very systematic. They're in a really high operational mode. We think that they could get back to a place where they're, they've got 200, gym openings. And, you point to the valuation, and I think that's fair, but they're still substantially below their pre-pandemic levels. And we think that the operating model that they have, and again, the management team they have in place is tremendous. And I'd also call out that they have the biggest advertising fund in the industry. They've got a little over $300 billion and now a chief marketing officer who can put it to work.